Hi, my name is RK. Today in this video we will look at different types of categories of equity mutual funds. So this video I have already done in Kannada. So if you are a Kannada speaker, you can also visit that video and look at that. So what are the different mutual fund categories we have in the equity schemes of the mutual fund? So when you're buying a mutual fund, you might already know how to buy a mutual fund, why is a mutual fund necessary and all that. But you will have a lot of confusion as to which category of a mutual fund you have to opt for. So there are various categories that you will see and various returns that these categories gives, but you do not know as to what is the ingredient in this mutual fund. So let us just look at the different equity mutual fund categories or types that we have and discuss about that now. So here you are looking at a table which tells you about the different equity mutual fund categories. Okay, so the first one being multi-cap fund. So in multi-cap fund, at least 75% of the investment is in equity and equity related instruments. So 75% they can invest in stocks and related things like derivatives, etc. And 25% they have the liberty to invest in debt or any other categories. So also in this multi-cap fund, 25% minimum is given in large, mid, and small cap stocks, and that is how 75% has to be brought to, and then the remaining 25% can again be in any other things like again you can go for 25% of large cap or any of these equity part, or based on the discretion of the fund manager they can change. And next is the Flexicap fund. So in Flexicap fund, what happens is at least 65% of the investment has to happen in equity and equity related instruments. But here there is no cap on whether these investments have to be small cap, large cap, or mid cap. So they can go for any of the category based on their strategies. Okay, and also we have seen that with FlexiCap and Multicap, there are some funds which also include foreign equities in the portfolio. So if you look at some of these funds scheme documents, then you will get an idea as to whether they have given a provision in the fund to go for foreign equities also. So that is something which is there in these funds. So you'll have to look at the scheme document and determine that. You can also look at the portfolio disclosures if this is already in existence, that is if the fund is not in an NFO stage or a new fund. Okay, then the other categories are like large cap fund, large and mid cap fund, small cap fund. So these four are more famous, and people invest in this because with large cap fund they get about 80% of investment done in the large stocks, that is the top 50 stocks in the Indian stock market based on market capitalization. And with large and mid cap fund, you have 35% in large cap and 35% in mid cap that the fund manager has to minimum invest. And after that, based on the fund manager's strategies, they can take any of the positions. So that is large and mid cap fund. In mid-cap fund, at least 65% of the investment has to happen in mid-cap stocks, and with small-cap fund, at least 65% of the investment has to happen in small-cap stock. So mid-cap stocks are the 150 stocks usually, which is after the top 100 stocks, and small-cap fund, the small-cap stocks are the usually after the 250 stocks, top 250 stocks. So from 250 first stock till 500 stock is usually what small cap funds try to capture. So these are the top important mutual funds that usually a mutual fund investor will be targeting to get into their portfolio. So you will have to know these distinguishes carefully. Okay, and Next, we have some other important types of mutual fund categories, but these are not that much used. These are used by a little advanced user who knows what they are doing, and probably mutual fund advisors whom the clients would have booked. So they will also be looking at these funds based on the financial targets and the strategies they have to meet. Okay, so dividend yield fund. So dividend yield funds predominantly invest in dividend yielding stocks with at least 65% in these stocks. So dividend yield, you might know there are a lot of large cap companies and some PSU companies which give uh, good returns as well as dividends. So the fund manager chooses these carefully and they invest in these stocks. Value fund. So there is something called as the value investment strategy where the fund managers try to pick up stocks of businesses which are like undervalued at the moment, but they see that the potential of the company is huge, but currently the value, the stock price is undervalued. So they try to grab those stocks at uh, the correct value. Okay, Contra Fund. So Contra Fund is another investment strategy wherein the fund manager selects stocks which are like against the trend. So there may be business cycles, there may be some news in the market or some economic factors that might affect some sector or particular businesses. So in contra fund, the fund manager waits for such opportunities wherein a stock has been beaten up because of some economic condition, news or whatever, and it is not the favorite. But these usually these stocks are like good businesses, and but the people will be skeptic at this moment on the future aspects of these businesses. So fund managers carefully examine these stocks and buy this based on their strategies and research. Okay, focus fund. So this is kind of an alternative for Flexicap or Multicap fund because the fund manager has an option to go in equity 65% in any of the uh, size of the company or the business. Here, the only thing is that a maximum of 30 stocks has to be taken up. So you will see focus fund which will have like 29 stocks, 31 stocks, and so this entirely depends on how good the fund manager is. So if you are betting on the fund manager and you know that this fund manager will pick up the correct 30 stocks which will give you massive returns, then only you'll have to buy these funds. Okay, so that is the thing. And next are sectorial and thematic funds. So here the fund manager invests 80% of the money of the investors in the stocks of a particular sector or theme. So you might have heard about sectors like infrastructure sectors or manufacturing and themes. If you say themes, so currently themes like energy opportunity, defense themes and all were are famous right now. And during COVID, you might have heard pharma theme and healthcare themes which were picking up. So sectoral and thematic funds invest in these kind of sectors or themes. So this is not advisable for individual investor if they are not very careful and looking at their portfolio once in a while. So what happens is some of these sectors or themes might go out of flavor, and you might end up getting bad returns in those cycles where this stocks don't perform. So that is the thing you have to take care of. Last is ELSS. So ELSS is something which you can invest in if you have to show ATC investments for your tax savings. So this acts more like that Flexicap category which we mentioned earlier, but here there is a lock-in of 3 years. So you have to be careful there, and you can show that investment in your ATC investments for tax saving. Okay, so these are the top categories which usually we come across as we invest in mutual funds. So apart from that, there are a little bit uh, complex categories. So these are categories which fall under equity as well, but based on the way the stocks or instruments are bought by the fund manager, they might also fall in the debt category or the multi-asset category. So you have to be a little careful here. So if you don't understand it, buy a pure debt and pure equity fund rather than going for a hybrid, because this is changing a lot these days, and a lot of funds are taking their strategy so that they have efficiency in some aspects. So it will be a little complex for day-to-day investors who want to like invest themselves. Okay, so let me go one by one on these quickly. So conservative hybrid. So this will invest 10 to 25% in equity and 75 to 90% in debt. So this is more or less the debt fund. Balanced hybrid fund has the 40 to 60% of investment in equity related instruments and 40 to 60 in debt. So it may vary, say 50-50 in 15 equity and 15 debt. So if more debt allocation is given in this balanced hybrid funds, then it will be taxed like a debt fund. So that is something you'll have to keep in mind. Aggressive hybrid funds. So these, as the name suggests, are aggressively into equity, and debt part is a little less. So these are a little bit volatile than the top, the above two. So conservative is the least volatile among these, and balanced hybrid is balanced. So uh, aggressive will be towards the more volatile side. Then there is dynamic asset allocation or balanced advantage fund. So in dynamic asset allocation, you will have uh, the variation going from 0 to 100% either way. So based on fund managers research, if they think that currently they have to go all in into equity, then equity proportion will be more and debt proportion will be less. So that is how it will be in by dynamic asset allocation. So based on the allocation which the fund managers gives for dynamic asset allocation, your taxation might change a bit. Okay, and then the for the balanced advantage fund, so it is usually kept at 50-50% by the fund manager. So this is usually helpful for people who are just entering into mutual fund, and they do not know as to what fund they have to choose. So fund managers usually suggest a balanced advantage fund over there, and there what happens is like if you have 50-50% allocation to equity and debt, so you are balanced, and that is why you are not that much volatile when you invest in these funds. So that is the balanced advantage fund. Multi-asset allocation fund. Here there is at least three asset classes into which the fund manager has to give an allocation, and a minimum allocation of at least 10% in each of these classes. So these classes are equity, debt, real estate. So real estate you have REITs, and then there is gold. So any three asset classes predominantly exist in multi-asset allocation. And multi-asset allocation, again there is a taxation wise is a little tricky. So if a multi-asset funds lean more towards equity, then they are treated as equity funds. If more of debt, then you will be taxed at tax slab based on how you exit. Also, there are regulations which are coming in, and changes happening. So after April 2025, we will get more clarity on these things. So taxation wise, these are a little tricky, and we'll have to be very careful when we invest in this. So the other two are arbitrage fund and equity savings fund. So these follow something called as arbitrage strategy for the arbitrage fund, where arbitrage is there will be opportunities when the market is volatile to take positions at a lower cost or sell at a higher cost in the stock. So such strategies are used in arbitrage fund. They are less volatile, and but they give returns like FD or slightly above. And the thing is, it is equity, so you will be taxed at a lesser rate like you are taxed for other equity schemes. And equity savings is again equity and equity related instruments are 65%, but there is less volatility. So this is something which you can consider if you need less volatility stocks. Okay, and taxation wise, given the things here, so this might be relevant during 2024, but may change later on. So you can take a look here. So all the equity related things will be taxed at LTCG 12.5% on gains after 1 lakh, and at 20% if it is before 1 year. So, okay, and these are the taxations as per for these hybrid funds. Okay, so you can take a look here. So then there is one more categories like solution oriented and other funds in the equity schemes. So here you will have things like retirement fund, children fund, fund of fund. So retirement fund and children's fund will have lock-in of 5 years. So retirement funds are used for retirement goals, and children funds are used for children's education or for your children's related goal. Okay, so these are two of those things. And fund of funds is like a basket of funds. So they choose different funds based on whatever theme they are playing, or the idea or strategy they are following. And they'll also have themes like abroad opportunities, or they'll have all season themes and things like that. Okay. One more thing you have to remember is when you go for fund of fund, so redemption may take a little longer because that is how it is. And last one, which I'll be talking about, is very important. So index funds or ETFs, index ETFs. So you can invest in ETFs, but there will be now fluctuation because it is listed on the market, and you buy it and sell it like any other stock. So I would recommend caution when you're investing in ETFs, and you can go for index funds. So index funds are like they follow some benchmark indexes. So there are indexes like Nifty 50, Nifty Next 50. So these funds are also called passive fund because the fund manager doesn't actively manage these funds, and these funds just mimic any of the benchmarks. So when you are investing in this, 95% of the investment is done in a particular index, and rebalancing etc happens based on how the benchmark is rebalanced. Only thing you have to be careful is selecting the fund. So there is something called tracking error, that is the difference that happens when the fund manager tries to adjust it to the benchmark. So you have to look at that, and based on that you can select index fund. So here you will know that you are getting returns linked to whatever the index is performing. So whatever market returns are coming, so you will have a return similar or a little less than that. And these are passive funds, so the expense ratios and exit loads are also like very less or nil. So exit loads will be nil for most of it, and expense ratio will be very less for these funds. So all in all, these are the different equity schemes and different types of categories of equity schemes which are available, and which you have to select through. So I hope this video is helpful to you in understanding about the different equity schemes. If any questions, please write in the comments. Thank you.